Hello and welcome to the Weekly Outlook at XM.com. It will be an important week for the dollar as the latest payrolls report and PCE inflation readings are coming up. We'll also get CPI data out of the Eurozone and Switzerland and GDP numbers out of Canada. I'm Maria Pachordes, and joining me to discuss all this is lead investment analyst Rafi Boyadjian. So Rafi, let's start in the U.S., where investors will mainly be watching PCE inflation figures on Thursday and the non-farm payrolls report on Friday. What are we likely to get from these figures? Has U.S. inflation reached its peak? And how might the dollar react to all this data?
Well, Maria, we are getting increasing signs that inflation has finally peaked in the United States. But we saw from the previous CPI report, inflation moderated at a much faster pace than expected. So that was clearly a positive sign. But the core PCE figure that we should get next week should tell us more what's happening with underlying price pressures. Now, the core PCE price index had started to tick up actually in recent months. So we should see whether or not it's going to calm down in October. Should it do so, it would further back the view that inflation has well and truly peaked, because the Fed does put more focus on this particular measure. And of course, the non-farm payrolls report will also be quite important. We've yet to see any evidence in the hard data, at least, that the labor market is taking a hit from the Fed's aggressive policy tightening, and the forecast for November is for only a slight moderation. So if the numbers are in line or stronger, it's likely that the Fed will maintain its stance that further rate hikes are needed, even if it will do so at a slower pace going forward. The dollar could find some support from a stronger number, helping it to stabilize. But should we get some weak numbers in the NFP report, as well as the PCE inflation numbers, these could trigger another round of selling for the greenback, potentially pulling it to fresh lows.
In contrast to the U.S., where inflation may be on the way down, inflation in the euro area hit double digits in October. What are we expecting from the flash estimates for November out on Wednesday? And how might the numbers affect the ECB's next decision and the outlook for the euro?
So inflation clearly remains a big problem for the euro area and the ECB. But we could see the headline figure dipping ever so slightly in November's flash reading. If you also get some encouraging signs of softening price pressures from the two core measures that we're also going to get, this could push up the bets that the ECB will raise rates by 50 basis points in December rather than 25 basis points. The ECB is becoming increasingly worried about a recession in the euro area, so some easing in inflation would give it the excuse it needs to slow down the pace of tightening. However, although this would be negative for the euro, it probably wouldn't suffer heavy losses because of the dollar being on the back foot right now.
Now, like the ECB, the Swiss National Bank also has to decide by how much to hike rates at its next meeting. On Tuesday, we'll get Switzerland's GDP figures, and inflation numbers will follow on Thursday. What are we anticipating there, and what reaction are we expecting to see in the Swiss franc?
Well, data should give us some idea of what to expect from the SNB at its December meeting. Now, the SNB has already raised rates by 125 basis points this year. Moreover, inflation in Switzerland seems to have settled around 3%, which is far lower than what we're getting in its neighboring countries across Europe. So the SNB is definitely not facing the same dilemma as the ECB about balancing growth with inflation. If both the GDP and CPI data were to disappoint, we could see investors pricing in a higher probability of a smaller 25 basis point increase by the SNB at its next meeting.
And finally, moving over to Canada, we'll get GDP data for the third quarter on Tuesday and employment stats on Friday. What will Bank of Canada policymakers be looking out for, and how big of a rate hike is likely at the next meeting in December? Also, regarding the Canadian dollar, are there any risks for the currency from the OPEC meeting on Thursday?
So starting with the employment report, now last month in Canada we got a big surprise because it looks like the Canadian economy added more than 100,000 jobs And should we get another impressive number for November, that would probably cause a rethink for BOC policymakers about slowing down the pace of rate increases to just 25 basis points, which is the current market-favored figure. Now, for the GDP data, although it's not quite as important as the jobs data, this will also give us a better idea of how well the Canadian economy overall is holding up. But when it comes to the loonie, pared back expectations about BOC tightening might not cause much damage from any weakness in next week's data, should they be on the weak side, because of the softer US dollar. But the loonie might come under pressure from the OPEC Plus decision on Thursday, should the major producers decide to alleviate some of the supply problems by, in fact, pumping more oil. Now, this doesn't seem very likely, given that it wasn't that long ago when they cut output, but they may signal if the EU's latest round of sanctions against Russian oil exports that are due to come into effect in December, if these start to cause some tightening in supply, then the OPEC would be ready to intervene, and this could see oil prices heading lower.
Rafi, thanks so much. And thanks for joining us at XM.com for this weekly outlook.